Hi, and welcome to my session. My name is Puneet Sethi. In this session, we are going to discuss some concepts about the NTDTL, that is called Net Time and Demand Deposit Liability. In simple language, you can say it public deposits. Okay, people used to have the various types of accounts with the banks, and bank maintain their accounts, and sometimes they give interest, sometimes they charge in wholesome. You can say that it is a public finance or public deposits. Okay, so in the technical term, it is known as net time and demand deposit liability. And in the easy terms, you can call it public deposit. So what is that? So let's discuss. So I start with the TDL. Okay, time and demand deposit liability. Listen, every bank has some kind of accounts of public. Okay, and they treat it as their liability. You should remember this: public deposits with banks are the liabilities to the banks. Why? Because public can claim that amount at any time with interest rate. They want facilities, they want internet banking, they want check facilities, they want DD facilities. Various things are there. So you can say that it is a liability to the bank. Okay, so in the technical terms, we call it time and demand deposit liability. So why it is known as time and demand? Let's discuss. So first term, we have the time and term deposit, time and term deposit, and second one we have the demand deposit. So let's start with the time or term deposits. Time and term deposit means any deposits which have some duration. Okay, which has some duration. Okay, there is some duration should be there. If you are opening an account with a bank, okay, and it has some duration, it is known as time or term deposits. Okay, in this we have two types, that is FD and RD. FD is fixed deposit and RD is recurring deposits. Fixed deposits, like take an example: X open an account with SBI, right? X open an account with SBI. Let's name it FD, fixed deposits, amounting to rupees 10,000, right? 10,000 rupees FD is open by X with SBI. Okay, and its duration is for 1 year. Okay, there should be a duration, right? So 1 year duration, and after 1 year, X is getting the interest rate. X is getting the interest rate on 10,000 rupees. Okay, so you can say that it is a contract between the X and SBI. X is opening the account in the form of FD amounting to rupees 10,000 for 1 year. After 1 year, they can X will get the interest rate. Okay, so X will get the interest rate. For example, after 1 year, X is getting the 10,800. So 800 is the interest rate. Interest rate on the 10,000 principal amount. Very easy to learn. Okay, so it is a, you can say that, lump sum amount. It means one time investment, one time deposit in a bank by X. That's why it's known as FD. What is RD? RD, it is a modern way of FD, right? In the RD, recurring deposit, it means we have to deposit the money in the form of installment. Okay, it means you can simply break the lump sum amount in the you can say that in the installment amount or in the some parts. Okay, let's take an example again. X is depositing money in SBI. Okay, like 1,000 rupees per month, right? 1,000 rupees per month for the 12 months. For the 12 months, it means X is willing to break his lump sum amount in the pieces, and now he is depositing the 1,000 rupees per month for 12 months. It means principal is 12,000 rupees, right? Principal is 12,000 rupees. Okay, principal is 12,000. So you can say that X is going to earn interest rate on 12,000. Simple to understand. It means he has broken the amount in installment form per month. Sometimes quarterly you can do, sometimes half yearly, depending on what you have the contract with the bank, right? So it's like a installment form. Okay, and it is a modern way of FD. I guess this is clear to you. Okay, recurring deposit means installment based plan, right? Next one, we have a demand deposit. Demand deposit basically depends on your frequency. Okay, what is your frequency of withdrawals and the deposit in a bank, right? Frequency. Saving deposit, in the saving deposits, any person can open the account. It is a most popular way of opening an account. Okay, so you can simply open a saving account with any bank. Okay, with your I card, pan card, passport, depends. Okay, so basically saving deposit is the most popular. It is a very easy to learn, and it is a very basic product of a bank, right? Okay, saving deposit, it is also known as salary deposit. It is also known as joint account. You can open in saving deposit. You can also open minor if you are less than 18 years. Okay, so saving deposit, it is a very easy to learn, right? You get the some facility like ATM card, debit card is there. Okay, you can withdraw the money at any time. Okay, next one we have the current deposit. Current deposit is opened by the businessman, traders. Okay, why it is open? Because it is used for the commercial activity. Okay, various types of transactions are there. Okay, the businessman main concern that there should not be any limitations on their transactions. They can simply transfer the amount at any time, because business depends on the transaction of money. Okay, the free flow of money is very much required in a business, right? So let's discuss in detail. FD, again, I'm repeating, it is opened by lump sum amount, right? Interest rate is given, prescribed interest rate. Okay, minimum, it should be noted that minimum FD is for open with the 7 days, and maximum is for the 10 years, right? Minimum FD is for the 7 days, and maximum is of the 10 years, right? More than 10 years, FD is not allowed. Okay. However, you can renew it with any bank. Okay, for the 15 years, for the 25 years, it really depends on you. But in the normal criteria, maximum FD duration is 10 years, 120 months, right? Next one, we have the recurring deposits. It is an installment based plan, quarterly, monthly, half yearly, weekly. You can simply put your money with the bank for getting the interest rate. There is a prescribed interest rate. It should be noted that minimum duration for the RD is a 6 months, right? Minimum duration is a 6 months, and maximum again it is a 10 year, right? Next one, we have the saving account. Saving account, it can be opened by any individual. No problem with this. Interest is calculated on the daily basis. No problem with this. Okay, current account, any businessman can open this account, and it should be noted that no interest rate is given on the current account. Okay, no interest rate. Again, I'm repeating, current account is used for commercial activity. It is used for the various types of withdrawals. It is used for financing the various types of business transactions, but no interest rate is given on the current account balance. Okay, so it is pure for the commercial activity, and saving account is pure for the consumption activity, right? The saving account and current account. I hope this is clear to you. So it is a main part of the NDTL: fixed deposit, recurring deposit, saving account, and current account. Now a question arises, how NTDL is calculated. Okay, its formula is given: banks NTDL, time and demand deposit liability, and minus deposits with the other banks. It is a most important part. It is a, you can say, at the climax of the NTDL. What is the deposits with the other banks? So let's take an example. Let's take an example of HDFC. HDFC has, you can say that it is the biggest private sector bank in India. Okay, HDFC has the public deposits, right? Public deposits, we call it DTL. We have already discussed in this session that DTL, public deposits. In this, we have two types of the accounts. First one is the demand, and the second one we have the time, right? First one we have the demand, and the second one we have the time. Okay. In the demand, we have two types, that is called saving account and the current account, right? Saving account and the current account. And the time, we have the FD, fixed deposit, and a second one is the RD. So you can say that we in the DTL we have two things: demand and time, saving account, current account, FD and RD. Let's take a figure of this 100 crore. Right, HDFC has DTL, well, that is the public deposits of 100 crore, right? At the same time, HDFC has interbank deposits. It should be remembered by everyone that every bank has some deposits with the other banks. Why they have the other accounts? Why they have the other accounts with the other banks? Because for the transactions, for the clearing of checks, for the clearing of the government tenders, for the clearing of the other transactions or the foreign transactions, every bank has to maintain some accounts with the other banks. This is mandatory by the RBI. Okay, it means every commercial bank or cooperative banks has some accounts with the other banks also. It is also known as interbank, right? Simple, interbank. Okay, so if we can call it other deposits with the banks, right? ODB, other deposits with the bank, other deposits. Okay, other deposits with the bank. Let's take an example. HDFC has account with the SBI, Standard Chartered Bank. Take one more bank, ICICI Bank, right? Okay, let's take its figure, imaginary 30 crore, right? 30 crore. It means DTL is 100 crore public deposits and the other bank deposits is 30 crore. Now you have to simply minus it. Okay, you have to simply minus it and your answer is NTTL. Answer is 70 crore. So you can say that it is a net time and demand deposit liability of a bank. Okay, again I'm repeating, every bank has a funds which is known as NTDL, net time and demand deposit liability. Okay, how it is calculated? First of all, we have to calculate the DTL. DTL means demand and time liability, saving account, current account, FD and RD. It means public deposits. Now you have to minus the bank account with the other banks. That is called other deposits with the banks, right? Other deposit with the banks. You simply minus it. Answer is NTDL. Answer is 70 crore. So HDFC has NTDL of 70 crore. I hope this is clear to you. Okay, if you are not getting anything, you can simply rewind the video. I hope this is clear to you. So if you like my video, kindly subscribe my channel and press the bell icon so that you can get the new notification every time. So I will meet you in the next lecture. So that's for today. Have a nice day.